Hello, and welcome back to the channel. I'm Algabot, and it's great to have you here. Today we're taking a close, educational look at an expert advisor for MetaTrader 5 called No Sure Thing Momentum Cross. This strategy is built around Martin Pring's No Sure Thing oscillator, a momentum tool that blends four separate rate of change measurements into a single, weighted reading. Over the next few minutes, you'll learn how the strategy defines a trend, how it times its entries with a signal line cross, and how it manages every trade with a volatility-based stop and target. Everything here is for education only, so let's dive in. So what exactly does this expert advisor do? At its heart, No Sure Thing Momentum Cross is a momentum following system. It watches a single chart and a single time frame, whichever one you attach it to, and it makes every decision on closed bars only, which means it does not repaint or second-guess a candle that is still forming. The engine behind it is the No Sure Thing oscillator, often shortened to KST, rather than measure momentum over one look-back period. The KST combines four separate rate of change calculations taken over progressively longer windows. Each of those four legs is smoothed with a moving average, and then they are weighted 1, 2, 3, and 4, so that the longer, more reliable cycles carry more influence than the short, noisy ones. The result is a consensus momentum reading that only turns up decisively when short, medium, and long-term momentum broadly agree. On top of that oscillator, the strategy layers two more filters. First, a zero-line check, so the aggregate momentum has to be genuinely positive before a long is considered or genuinely negative before a short. Second, a sloping trend filter built from an exponential moving average. So price has to sit on the correct side of that average, and the average itself has to be pointing the right way. Risk is handled with the average true range. The stop distance, the take-profit target, and an optional trailing stop are all measured in multiples of recent volatility, and position size is worked out from a fixed percentage of account equity. Who is this style suited to? It leans toward patient, trend-following traders who prefer confirmation over speed. Remember, this is an educational breakdown, not a recommendation, and like any approach, it will have losing trades as well as winning ones. Let's break down the exact logic the strategy follows, step by step. Everything begins when a new bar closes, because this expert advisor only acts on completed candles. First, it rebuilds the No Sure Thing oscillator. For each of the four rate of change legs, it measures the percentage change in price over that leg's look-back window, smooths it with a simple moving average, and then combines the four smooth values using Pring's 1, 2, 3, 4 weighting. That single number is the KST. The strategy then takes a moving average of the KST itself, and that becomes the signal line. Now the strategy looks for three conditions to line up. The first condition is the momentum cross. For a long, the KST has to cross from below its signal line to above it. For a short, it has to cross from above to below. This crossover is what times the entry. The second condition is the zero-line regime filter. A long is only allowed when the KST is above zero, confirming that the aggregate momentum is genuinely positive. A short is only allowed when the KST is below zero. This keeps the strategy from acting on a small upward wobble inside a broader down phase. The third condition is the trend filter. The strategy calculates an exponential moving average of closing prices, 50 periods by default. For a long, price must be above that average, and the average must be rising. For a short, price must be below it, and the average must be falling. Only when all three agree does the strategy signal a trade. When it opens a position, it places a stop loss a set number of average true range multiples away from entry, 1.8 by default. The take profit is placed at a reward-to-risk multiple of that stop distance, also 1.8 by default, meaning the target sits further away than the stop. After that, an optional chandelier trailing stop can follow the trade. It trails price by a multiple of ATR and only ever ratchets in the trade's favor, never loosening. The strategy holds just one position at a time, and it can also skip entries when the spread is too wide. That is the complete decision loop. Let's look at the actual MQL5 code that runs inside MetaTrader 5. At the top are the input parameters you can adjust in the strategy tester. You can see the four rate of change periods, 10, 15, 20, and 30, which set the short through long cycles of the oscillator. Below them are the smoothing period, the signal period of 9, the 50-period trend EMA, and the average true range window of 14. The stop multiplier and the reward-to-risk ratio, both set to 1.8, control how far away the stop and target sit. Next comes the signal logic, evaluated only on closed bars. The cross-up variable is true when the previous KST was at or below its signal line and the current KST is above it. The cross-down variable is the mirror image. The trend-up check requires the close to be above the EMA and the EMA to be higher than its previous value, while trend-down requires the opposite. The strategy then combines these. A long signal needs a cross-up, a KST above 0, and a rising trend, while a short signal needs a cross-down, a KST below 0, and a falling trend. Finally, look at the order placement. For a buy, the code takes the ask price, sets the stop-loss one stop distance below it, and sets the take-profit at the reward-to-risk multiple above it, then calls trade.buy. For a sell, it takes the bid price, places the stop above and the target below, and calls trade.sell. Both sides use exactly the same volatility-based distances, just mirrored. That symmetry is what keeps the strategy balanced between longs and shorts. Now let's bring it all together on a chart and walk through two complete trades, first a long and then a short. On the price panel, you can see the candles with the trend EMA plotted over them. And in the panel below sits the no sure thing oscillator with its gold KST line, its green signal line, and the -0 line running through the middle. Look at the opening candles on the left. Price is drifting lower in a small pullback, and down in the oscillator panel the gold KST line has dipped below its signal line and slipped toward the 0 level. Momentum is soft here, so the strategy simply waits. Nothing lines up yet. Then watch the bar marked as the buy entry. Price snaps back upward with a strong bullish candle that closes back above the trend EMA, and the EMA itself has just turned up. At the very same moment, down in the oscillator, the gold KST line crosses back up through its signal line and pushes above the 0 line. That is all three conditions agreeing at once: the momentum cross, the positive regime above 0, and the rising trend. This is where the strategy signals along, and you can see the buy entry marker on that candle. From there, follow the next few candles higher. Each one builds on the last, closing higher than the one before, while the KST line keeps climbing well above its signal line, showing momentum broadening out. The stop-loss sits below the entry at a distance set by the average true range, and the take-profit target sits further above, at 1.8 times that stop distance. As price presses into that rising run, it reaches the take-profit level, and you can see the take-profit marker where the long trade closes for a completed move. Now the character of the market changes. After that peak, price rolls over. The candles start closing lower, price slips back below the trend EMA, and the EMA begins to slope downward. In the oscillator panel, the KST line rounds off at the top and starts falling back toward its signal line. Watch the candle marked as the sell entry. Price closes decisively below the falling EMA, and at the same time the gold KST line crosses down through its signal line and drops below the 0 line. Again, all three conditions agree, this time to the downside: the downward cross, the negative regime below 0, and the falling trend. This is where the strategy signals a short, shown by the sell entry marker. From there, price works its way lower, candle after candle, each closing beneath the last. The stop-loss now sits above the entry, and the take-profit target sits below it, once more at that 1.8 reward-to-risk distance. As price slides into a fresh low, it reaches the downside take-profit, and the take-profit marker shows where the short trade completes. Notice the rhythm of both trades. In each case, the strategy waited for the oscillator cross, confirmed that momentum was on the right side of 0, and checked that the trend EMA agreed before committing. That layered confirmation is the whole idea behind no sure thing momentum cross. Of course, not every setup would play out this cleanly in live markets. Trends can stall, a cross can fail, and the stop-loss would be reached on losing trades, which is a normal part of any strategy. And that brings us to the end of our educational breakdown of the no sure thing momentum cross expert advisor. We looked at how it fuses 4 rate of change legs into a single momentum oscillator, how it stacks a signal line cross, a 0 line regime check, and a sloping trend filter before entering, and how it manages every trade with volatility-based stops and targets. Remember, everything in this video is for educational purposes only and is not financial advice, a recommendation, or a solicitation to trade. Trading carries real risk, and losses do happen. If you found this helpful, please like the video, leave a comment with the strategy you'd like us to break down next, and subscribe for more MetaTrader 5 strategy analyses. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.